Hello, this is Bode Oshosami and welcome to another episode of Global Business Insights, where we look at the headlines, the main business headlines, and bring you some additional analysis. Nigeria's Ngozi Okonjo-Iweala is now set to serve her second term as the Director General of the World Trade Organization. There were no other candidates to challenge her nomination before the window closed. The Mortgage Bankers Association kicked off today's calendar at 12 GMT with its weekly applications tracker. This week, applications rose marginally by 0.5% against the steep fall last week by 10.8%. US monthly headline inflation remained stable at 0.2%, and the yearly reading ticked up to 2.6% from 2.4%. The CME FedWatch tool is now pricing in a 62% probability of another 25 basis points rate cut by the Fed at the December meeting, with a 38% chance of rates being held unchanged. Bitcoin was still up above $91,000 for the first time today, adding to its post-election rally as traders digested the October inflation data. Can Elon Musk come up with $2 trillion of savings as he and Vivek Ramaswamy, politician and entrepreneur, assume new roles to lead the Department of Government Efficiency in the US? He has only July 2026 to deliver the target as a 250-year Independence Day anniversary present to the American people. Trump met Biden this afternoon at the White House for talks on transition of power. Bellwether stock Home Depot posted strong quarterly earnings and raised the full-year outlook. Still, stocks struggled to rise after weak guidance on home improvement recovery. High interest rates and housing prices also affected home sales. The pound sterling weakened yesterday after UK employment data conditions in 3 months ending September showed a loosening labour market. The ILO unemployment rate rose to 4.3% from 4% in the 3 months ending August, higher than estimates of 4.1%. In the same period, UK employers added 219,000 new workers, fewer than the former release of 373,000. The headline German ZEW Economic Sentiment Index sank to 7.4 in November from 13.1 reported in October, missing expectations of 12.8. The current situation index slipped to minus 91.4 in the 11th month of the year as against October's minus 86.9 read. Data missed the anticipated minus 86.0 print. Some data from the Nigerian Central Bank, the latest business expectations report released yesterday, revealed businesses were optimistic in October, attributed to the agriculture and services sector. The survey revealed that the Naira will continue to depreciate this month and the next 3 months, but will begin to see appreciation in the next 6 months. Nigeria Composite PMI for October 2024, according to the CBN, stood at 49.6 index points, indicating contraction in economic activities. Notably, the industry sector was unchanged, while the agri sector also registered expansion. The report out yesterday said 19 sub-sectors registered decline in economic activities, with transportation and warehousing reporting the highest decline. Earlier in the month, note that the latest October Stanbic IBTC PMI report in Nigeria said the downturn in the business environment further worsened at the start of the fourth quarter. It came down to 46.9. That's their own indicator, still reflecting the impact of price pressures on consumer demand and business investments. PMIs in contraction are likely to drag down the GDP growth Q4 data, already downgraded by the IMF to 2.9% from 3.1%. Nigerian inflation data for October, that CPI, comes out on Friday. High inflation has been the major drag on growth. The consumer price index in the US did not cool down as we had seen in September, but analysts are still not so sure if the data will influence the next FOMC decision to cut rates again in December. The headline inflation, as expected, was at 2.6%, higher than the 2.4% year-over-year rate in September. On a monthly basis, core inflation, which excludes the more volatile prices of food and energy, held unchanged at a 0.3% pace. Core inflation year over year was also in line with consensus expectations at 3.3%. Shelter prices again accounted for more than half in the headline CPI's increase, with a 0.4% month-over-month gain, while increases in services prices slowed to 0.3% from 0.4% in September. The last bit of inflation is proving difficult to wring out. Energy prices were flat for the month, following a 1.9% decline in September, and increases in airline fares were offset by declines in prices for clothes and furniture. The US dollar, however, started to pick steam after comments from Federal Reserve Bank of Dallas President Lori Logan that a December rate cut might not be such a certainty as markets are pricing in at the moment. The outlook for inflation remains uncertain, with economists warning of potential inflation resurgence after election of Donald Trump. Markets suspect the Fed may have some challenges in further easing, as the incoming US government policies could lead to higher debts, more deficits, and lower taxes, and tariffs could make prices even stickier, forcing the Fed to hold and watch closely the impact on the numbers. Cutting costs and looking for efficiency is not a new thing for incoming governments foraging for fiscal space. Apart from uncovering a massive black hole, Chancellor Reeves appointed David Goldstone as the chair of the new Office for Value for Money to help realize benefits from every pound of public spending, in addition announcing a 2% productivity, efficiency and savings target for all departments to meet next year. This will be achieved by using technology more effectively and joining up services across government. For Musk, he must use his cost-cutting skills to trim off a third of US $6.2 trillion government spend. From a familiar consulting mindset, and I've done my fair share of cost-cutting projects, it should not be too difficult to find efficiency and cost-saving opportunities. Indeed, it would be easier from outside, which is why Musk has a better chance to get this done. But given the very divided nature of the polity and huge distrust, implementation will be much more difficult than conceptualization. For Twitter, it was portrayed as a bloodbath as he aimed for $1 billion annually in infrastructure and cloud costs, as well as deploying aggressive cost-saving strategies, which included workforce cuts by about 80%, cutting down on non-essential expenses as well. Musk has the right CV to lead this role. Vivek has the youthful zeal, private sector savvy. Both will bring some innovation, and we may have never seen this type of review being done in the US system before, but already there is talk of the legality of the role as the lawyers prepare their knives to resist the initiative, which is not exactly a cabinet role and will deliberately, I think, be portrayed as a way of getting back at a previous government who did not hide their disdain for Elon Musk. Vivek is a fantastic communicator, and I expect will do most of the talk. Musk and Vivek, plus the right army of consultants, have a better chance of finding the $2 trillion he needs to delight his client. Musk and Vivek will perhaps need more courage and than re-engineering skills as they go about with this bold reform. Nigeria's crude oil output, including condensate, has spiked by 16.56% to 1.8 million barrels per day in October 2024 from 1.54 million barrels in September. Quite a jump. That's according to reports. NNPC also announced that it no more imports fuel products as it meets all its needs from Dangote refinery. Central Bank said Nigeria's foreign reserves increased to $40.16 billion as as of November 11, 2024 for the first time since 2022. This is a significant increase from the $38.3 billion recorded in September. Efforts also said to be underway to further increase oil output to 2 million barrels per day by December 2024, exceeding its OPEC quota. Nigeria has consistently argued that its quota was in no way representative of its production capacity and needed a sizable revision. The group CEO, NNPC Mele Kyari, also reiterated it was committed to ensuring energy security, sustainable growth, and energy affordability. He added that it had perfected plans to deliver 12 compressed natural gas mother stations and mini liquefied natural gas plants. This is all coming soon as part of efforts to boost the existing 1.6 billion cubic feet of gas supply for the domestic market. More good news, NNPC says it has cleared its outstanding 4.68 billion cash call debt to the 5 international oil companies operating in the country. The improved capacity to clear debts comes from the total removal of subsidy on premium motor spirit, and that of course has helped the NNPC treasury. But both central bank and Stanbic IPTC October PMI showed the economy in a contraction, dragged down by still troubled industrial sector. The incoming new Minister of Industry, Jumoke Oduwole, has said that her focus will be on driving support for the export business, and rightly so. Let's just say there's a lot to do to revive the tepid economy, and healthy reserves will help. On the Nigeria energy sector, EVI has been consistent in stating that the problems are structural and much more reform is required to get sustainable gains. The imperative for higher productivity and efficiency in the sector is even much higher, as the incoming US government has pledged to slash oil prices. Beyond the whitewash, privatization of most of government shares in NNPC should remain on the table to bring in urgently needed capital to modernize the energy infrastructure, to add more value locally, and the government should not take their eye off the ball concerning still early stages of deregulation and opening up of the downstream sector. European stocks mostly down, with global markets assessing the latest US inflation data. US stocks were roughly flat as the US trade ran out of steam and markets were digesting the latest inflation data for clues or further catalysts for sentiment. Well, that's all we can take on this episode of Global Business Insights. This is Bode Oshosami. Thanks for sharing on Facebook, LinkedIn, X, and YouTube. And again, thank you so very much for watching. Bye-bye.